me something, Uncle Money.
Welcome to another episode of Practice Prosperity. We have a special guest, Lissa Meza. She is an accountant. Not only an accountant, she does bookkeeping as well. And I think this is important for our business owners. Really, what should you think about dealing with the tax preparer and an accountant and the things that you can do to improve your relationships? So thank you for joining us today.
Thank you. Thank you so much for having me.
Awesome. So can you tell me a little bit about your firm and the type of clients that you serve?
Sure, be happy to. So I am a smaller firm. So started in 2020 officially and became my own boss and took on all the entrepreneur stressors that came with it. And then COVID happened. So that was exciting. Learning curve was very real for me on running a business and then also doing my job. So it's been fun. I love it though. So we do offer bookkeeping, kind of all the accounting encompassing things, CFO advisory, but we also do the tax aspect. So we do tax preparation and tax planning for business owners specifically. So we do mostly assist with the construction service industry. So that'd be like your landscapers, your tree services, builders, all of those kinds of industries. And then we do take on the occasional other industries such as restaurant or I had a baker at one point. So we've kind of done the whole spectrum of industries, but we do tend to focus on construction and real estate.
So let's begin with your origin story. Did you always know you wanted to be an accountant? Did you come out of the womb with an abacus? Like, what was your journey to become an accountant?
I was really good at math, but you don't have to be good at math to be an accountant. So, but math was always my favorite subject. Like I literally looked forward to that class. I still remember learning how to balance a checkbook in like sixth grade because it affected me so much that I was like, oh, this is cool. You don't learn that anymore because now you got online banking and digital money. So, but I did not always want to be an accountant. I think when I was really little, I wanted to be a lawyer. So, and then a veterinarian. And then by the time I got to college, I wanted to be a photographer and run my own business. I had kind of really come out of my artistic shell in college. So that was when I took business management and I really liked learning kind of the back end of things. Kind of fast forward a few years later down the road after having some corporate jobs that I wasn't entirely happy with in the digital marketing specifically. My job right before kind of going into bookkeeping was digital marketing analysis. And I really enjoyed that. I like analyzing numbers. And that was kind of, I think, the window for me to see that I liked analytics and seeing what numbers can really do and ROIs. And so I had helped a couple of friends of mine with their what we call make readies here in this town because we have college students live here. So they clean them out and make them ready for the next student or next person. And I was helping them with their books and I was doing that for free so that I could learn and see if I liked it. And I did that for a couple of years and I had done some contract work and then kind of took that and they encouraged me to start my own business thereafter. And I still had a day job, by the way, like I was still doing corporate world during this time. So it was strictly just a learning experience and side hustle for me. So my husband actually encouraged me to start my own company. And I had taken courses. Like I didn't just jump into this with no learning at all. Like I took a lot of classes. So my fear, I like stability. So my fear was being an entrepreneur and not working for someone else. I had joined a local group for entrepreneur women, and they also encouraged me to start my own business. And so with those kind of big factors of encouragement, I was able to decide that I wanted to start my own business. And so I quit my day job in February of 2020 and then started my business officially. By then I had a couple of clients that I was doing already, but officially started my LLC February 2020.
Good. Before we go into the accounting aspect, any advice, because we talked to a lot of business owners about digital marketing, your experience there, what did you take from that you're applying today? What are some things that you would recommend business owners think about marketing and maybe the analytics side of it?
Sure. A lot of owners that I speak with now and even back then, they don't really pay attention to what the ROI really is for them or how they can even track it properly to their financials specifically. So, you pay a marketing agency, say $500 a month, and they're supposed to do your social media, and you don't really ask the question of what that entails exactly. So, and I understand that feeling because marketing now, biggest pain sore for me. I have a marketing person for that. But yeah, if you don't know what you're spending it on and what it's getting you in return, you could just be throwing that $500 a month away. And there are ways to make sure that you are getting that ROI, especially in today's world of analytics, because you can truly target your marketing so much better than you could 10, 15 years ago. Hell, five years ago. Sorry, didn't mean to say that. But yeah, so ROI is super important. And I think that gets overlooked a lot because you're doing all the things as the owner. You just have your hat on for all other things. That is kind of the last thing to think about. So is accounting. If you don't like doing it, you won't do it first. So that tends to play a part as well.
Makes sense. So during this interview, I would like for you to say the things that you wish you could tell your clients, but because they're your clients, you have to provide great customer service. So let's be really honest, okay?
Okay.
Let's start off with some definitions. So I think in the accounting world, people think CPA, they think of auditor, and it could be the same thing, could be not the same thing. Let's start off with the term bookkeeper.
Okay.
When a business owner should think about bookkeeping, how do you think they should define what a bookkeeper is?
That's a great question. And I will tell you that there are so many different versions of these definitions because it really depends on whether you're working for an accounting firm versus a business, because accounting firm is going to be way more detailed on what they want in that bookkeeper role, whereas a business is kind of giving bookkeeper role to like their admin assistant. So those roles are a little different looking. I will say true bookkeeper, I use that loosely, will do your categorization of your transactions to your books, whether that be in an accounting software or something else. So they will analyze your expenses and your income and kind of give you a financial statement that will show you your percentage of your income that you're using. They'll give you your profit margins. So bookkeeper can really be an analytical role, but some do not use it that way. Some are strictly just categorizing your transactions, producing your profit and loss report and your balance sheet, and end of day. Like that's their job. When I started my bookkeeping business, was doing the analytics of it and trying to give my clients the most information off of those financial statements as possible so that they could make better business decisions, because that's ultimately the foundation of making those decisions is bookkeeping. And one thing that's overlooked constantly is check and balances. Everything has to check out. You have to make sure that you're reconciling things, even if you didn't have any transactions for that category. Say you didn't make any loan payments to yourself, you still have to reconcile that so that you remember, if for some reason you paid out of your personal and you forgot to record that. There are so many variables that play a part in your accounting that people overlook. And the easiest way to do that is by not reconciling your accounts. So
Where have you seen business owners underutilize their bookkeeper? They may say, yeah, that'd be nice if you did it, but I'm too busy running my business. Like, how does somebody like really get the fruit from what they're paying a bookkeeper to do?
expectations are number one thing with me. I have a lot of people come to me and they're like, oh, well, I just don't ever hear from them, or they don't really give me anything. They don't explain anything. If it's not established in your engagement, then they probably aren't going to do it. Accounting can get very overwhelming very quickly when you have multiple clients. So most accountants will get bogged down or overwhelmed and they forget, or they just don't do those things. So they do charge less, yes, but you do get what you pay for. So if you don't establish that I want to update every 2 weeks, I want to go through the financials every month with you, if you don't establish what you're wanting out of that engagement, I guarantee that person is not going to go the extra mile for what you're paying them. So I would say communication, and that's one big reason why I started my company, was to increase and better the communication between accounting and client. Because that was a big thing that I was hearing complaints for was, oh, my accountant never talks to me until tax time. Well, to be fair, if you never ask them to do anything more than that, that's all they're going to do. So,
what are some things that you see really move the needle that business owners should ask for? Like, should I ask for a regular meeting? Should I ask for some more analysis? Like, what are the things that I should ask for? I may have to pay for more, but what are some value added items?
So one thing we do with our monthly recurring clients for bookkeeping is monthly meetings. So we go through the financial statements. Minimum is profit and loss and balance sheet, but we do like to also go through accounts receivable, accounts payables, and maybe even a budget if we have one, or if that's something that they wanted to start doing, we create those. But we go through those line by line for like the first 2-3 months to make sure that we are understanding each other and their expenses, and they understand their financials, because that's the biggest thing that owners don't really appreciate about those statements. Don't refer to your bank account as a way to make decisions. Refer to your financial statements so that you can make a real, true decision on whether you can afford this new asset or whether you're really going to get a tax break from, adding this employee. So, yeah, all of the, like, the bookkeeping is the foundation to making those decisions. But if you don't utilize the statements that it creates, then you might as well just use your bank account as a determining factor. So cash flow is really important, and I think that gets overlooked sometimes. Like, they might keep up with their accounts payable, say, like, they know that these bills are coming, but I don't think they truly appreciate that you could actually foresee those better and account for those better than just knowing in the back of your mind, like, oh, we have like these 4 monthly bills recurring, so I can add one more, it'll be okay. Well, but you also took on 3 other projects that you're going to have to hire more people for, even if they're contractors. So what's that expense going to look like that month? So all play a part.
So we have the first definition, bookkeeping, but under accountancies, there's also something called tax preparation. How would you define tax preparation, and how should business owners think about it?
Compliance. It is compliance. It is not proactive. So if you're hiring someone to do your tax preparation for your tax returns, such as income tax returns, your federal income tax returns, you are truly just giving them your data, and they are using what you provide to them and asking you their questions to make sure they understand your data, and then putting together a tax return. Compliance, transactional, it very rarely goes beyond that. Some will do, more of a interaction versus just, hey, send me this stuff and I'll do your return. A lot of tax preparers are just transactional. We do go through our returns with our clients after we've created them to make sure that all of that information is correct. I hear so many times, like, I read it, but I don't know what it means. So we, especially with business owners, because there's so many different formats of what they're having to file. So you have your S corps, you have your LLC sole proprietors, you have your partnerships. So all of those are different forms, and those play a role in how your tax liability is created. So,
for the business owner who says, I don't really understand my tax return, can you please explain their responsibility, what they're liable for, and what their tax preparer is liable for?
Yes. So tax preparer, the person's name on the tax return, is the one responsible 100%. So if your tax preparer does not do something correctly, yes, technically you could go after them, you yourself as the taxpayer, but the IRS is still going to audit you, the taxpayer, not the CPA or tax preparer, whoever performed the service. You can also start an investigation, like report them to the IRS, but you are still going to be the one audited as the taxpayer. So taxpayer is 100% responsible for what is on that tax return. So yeah, you should definitely ask if you understand it correctly.
Any best practices to say, how should a business owner communicate with the tax preparer? Like, what are some of the things they need to be saying? What are some things they need to be looking out for when interacting with that professional?
So a lot of times it comes down to the entity type. That plays probably the biggest variable for business owners. So if you are a sole proprietor, single member LLC, you're filing a Schedule C on your 1040. It's pretty straightforward. You're getting deductions on the expenses you spent in your business. Where the variable comes into play on your 1040 or individual return is whether you have children or an adult dependent, if you have an adult dependent, what your retirement plan is. So many variables. That's a rabbit hole. But so if you're an S Corp, for example, you're filling out an 1120S, and that has to be filed before you do your 1040. Mm-hmm. Some people don't understand that when you are a partnership or a corporation that you do have to file those business returns first, because they produce the K1 that goes onto your 1040. Whereas if you're a single member LLC or a sole proprietor, it's just a Schedule C on your 1040. It's just an additional form to your 1040, and can be filed at the same time. So, but there are a lot of variables that play a part in how your tax returns are calculated. So ask as many questions as possible. Don't be afraid to ask questions. This is your return. This is you reporting your information to the IRS. So don't be afraid to ask questions. There's no wrong question. I always tell my clients, give me everything that you have, and then we'll see if we need more. Or, if you gave me too much, I'd rather that than not enough. So yeah, if you're questioning whether you should send it to me, send it to me.
So we've discussed bookkeeping, tax preparation. Now we're going to talk about tax planning. How would you define tax planning, and how should business owners think about tax planning?
Being proactive with their tax savings. So a lot of times you'll hear people in general, not even just business owners, how do I save on my taxes? They tend to ask that question near the end of the year. Common trend. The best way is to ask that at the beginning of the year so that you can plan ahead and set your goals on what you're wanting out of that plan. So the big thing here is the goals, not how much you can save, but what are you planning on doing with those savings? So if you're wanting to create security for your kid in the future, if you're wanting to take more vacations throughout the year, if you're wanting to add another business under your belt, all of those things have different plans that would, be based on both your individual and your existing business. So goals is the number one thing to do first. And then we can start discussing what that looks like as far as what retirement savings we do, how many employees you add in the year, do you hire your own kids? So there's all kinds of variables that play a part in being proactive. But the number one thing that I tell my clients is goals. Set your goals. And it doesn't have to be a year goal. In fact, I'd rather it not be a year goal. I want it to be like 5-year plan, 10-year plan, because that makes a difference, especially when it comes to picking a retirement plan.
I think that's important. Yeah. I don't hear a lot of tax accountants say goals. Like, what is your goals? Like, saving taxes is not always the number one objective or the best thing for you and your family. Speak on that difference between achieving your goals versus saving as much money on your taxes, because sometimes that can be kind of hindering at times.
Mm-hmm. So, for example, if you're looking to purchase a home, you might not want to take all the deductions. If you're like the breadwinner in the family, but you're a business owner, your income is kind of the determining factor almost in whether you're going to be approved or not. But if you take all of your deductions, you're cutting down your income, and that can hinder what home you buy. So lenders will ask you to, remove an asset in your name or, something like that. So that's where kind of tax preparers and lenders kind of clash sometimes, but because we want you to get as most savings as possible where they're trying to get you a home. But it also has to do with psychology, like, what are you really good at with your money? How do you view your money? And what are you going to do with that? So, for example, if you're head of household, you have 3 kids. Are you good about saving money each month for each one of those kiddos in some sort of account? Are you a big spender where you're zeroing out your account every month, but you want to grow your business at the same time? Like, it really all plays a part. And I really think it comes down to how we view money and how we've been brought up to view money. I think that's ultimately how it comes. And when someone says they want to save on their tax return, yes, you do, but wouldn't you rather do savings throughout the year that will benefit you 2, 5, 10 years later versus the immediate saving of, oh, well, I'm going to put 6,000 in this retirement so that I can get it back. Like it all plays a part. And then there's the factor of, if you do put it into investments, what are that capital gains if you take it out too early, or, the eligibility requirements and things like that. So that's why we got to look at what your goals are and how you view money and how you use money.
I like it. A lot of issues I see, I work with a lot of clients, they, taking on a lot of student loan debt. And there's one thing about qualifying for different student loan programs, whether, to file separately, file merit, file and joint. Talk a little bit about that. Do you come across that at all, as far as
Yeah.
how people think about paying back their student loans and how it affects how they file?
Yes, 100%. I'm a millennial, technically. So I think you can see the difference in generations of how those student loans were viewed and how they were taught to us, because millennials have so much student debt, so much. And that, I think that played a large part, because in our generation going through school, we were always taught, you go to college. You go to college right after you graduate. Doesn't matter if you don't have the money. We got plans for that. We got loans for you. You can do it. Important thing is to get the degree. Whereas nowadays, like for my kids, for instance, they're taught, oh, well, you don't have to go to college. It's not for everybody. You can just do a secondary program, or you can just, learn on the job. And I think that was closer to what my dad's generation probably was learning on the job and working your way up. You didn't necessarily have to have a degree to be promoted. It was more of like an extra benefit, kind of started with a higher pay kind of thing. But I definitely think the school system played a part in how we view student loans specifically, and has been detrimental to a lot of people because they sign up for the income driven repayment plan. As a business owner, you're not making a whole lot to contribute to that, so especially your first 2 years or so. So yeah, that can be really hurtful, and getting approved for other things. It has become a norm with lenders to ignore your student debt, because it's so common, and it's like expected almost for you to have 50K in debt, like I've had so many lenders tell me that. They're like, oh, don't worry about the student debt. It's fine. We can explain that away. I'm like, but it's still debt. Like, you still owe it, you know? So yeah, I think it has a lot to do with it for sure.
Definitely. Now, one thing that you mentioned was preparing for retirement. So, as a business owner, you probably don't have a pension unless you set it up. You probably don't have a 401k unless you set it up. So, when you're talking to somebody about planning for retirement, what is kind of the logic that you go through? How do you ask the right questions to figure out which retirement plan is best for them?
Goals. So are we talking about family goals? Are we talking about individual goals? Are we talking about growth goals? Where do you want your money to go to in the next couple of years? Where do you want it to go in the next 5 years? Because not everything has to be an immediate change. And that's where the psychology comes in. Are you good at saving already? Or are you not used to it? So we got to take baby steps. So that also plays a part. Do you have employees? Do you want to be able to give them benefits? Do you not have employees? So there are different plans for everybody. So there's, the simple IRA, there's the SEP IRA, standard 401k. So it all plays a part on what your contributions would be, what your goal is, and then also so my part in tax planning is to look at what the tax savings would be. But almost always it ends up being based on what savings they're really wanting 5-10 years from now, 25 years from now, depending on how old they are. So if they're over the age of 50, that plays a part in what kind of plan, right? Because you're technically not supposed to withdraw before 59 and a half on some plans and 65 on another. So there's rules to that. And I don't know all the ins and outs to every retirement plan. So that's when I rely on other experts who are financial planners specifically, who do those things and know the ins and outs and all of the fun eligibility requirements. And mine is just a view of what the tax savings could be in the next few years and that kind of thing. So
If we were going to make a perfect world, how would you interact with the financial planner for your client? So you have a client, you're doing tax planning. What type of interaction would you like to see? What type of communication going back and forth? What does that look like?
Partnership. It is not a competition. We should both be here to help the client, not fighting for their attention, fighting for their business. It's a partnership. And my engagement states partnership, by the way, because I can only help you if you let me help you. So communication, again, is like number one thing that has to happen both ways. So I want you to call me out if I'm not meeting that expectation, and I want to do the same to you. So, because that's how we're going to get to your goals. That's how we're going to succeed in this plan. And with financial planners, it's the same way. I don't want to be um, working with their financial planner and that person just ghosts me because they don't like that I'm an accountant, or, egos get in the way sometimes. And so I've actually created my tax planning service starting this year as more of a kind of board panel aspect. So you are treated almost like you're director of a Fortune 500 company, so you have us as your board of experts to refer to and ask direct questions to, so that we can all be on the same page without 100 emails going back and forth. So in a perfect world, that's what it looks like to me.
I like it a lot. So we always say, take it to the next level. And part of taking it to the next level is bringing on a tax professional. Explain the dangers business owners, specifically business owners, have using kind of do-it-yourself tax planning software versus using a professional. What are the things that you see missed because they come to you after something has gone wrong, right? So what are the dangers for business owners using those self-prepared tax planning softwares?
Questions. So it is an algorithm that determines what question to ask you. And if you answer this first question this way, then it's going to ask you the next question a different way. So if you answer a question wrong because you don't know any better, then it's not going to know to ask you X, Y, and Z. So it's not all bad if it's a straightforward thing, but you don't know that it's a straightforward thing because you don't know taxes. So a lot of times I tell my clients, like, if you just started your business, you're a sole proprietor or single member LLC, and you've done your own taxes before that, before you even became a business owner, you might be able to use TurboTax and be fine. Maybe. But if you're an S corp owner, you got a partner, you have, 5 different assets in the business, you don't know what you're doing. I'm sorry. The software is not going to know, because it's not going to know to ask you. It might ask, did you move? Did you purchase a new vehicle? But when it comes to business returns specifically, I think they're ill-equipped. And I think it's not a self-serving system when it comes to business tax returns in general. So I think it would be wiser to choose a professional. But even when you choose a professional, you should still be communicating with them. You should still be asking them questions. You should never just, oh, here's my bank statements and here's my receipts. Let me know what I owe. That should never be the type of relationship you have with your tax preparer. So
I like that. I like that. So let's say somebody was doing their own tax returns and they received the dreaded letter in the mail that says, I'm not sure what the letter is called. Saying that I think there's some discrepancies. This is the IRS with what you've claimed versus what we have in our system. Explain that process and the emotions that come when a business owner receives that letter.
Oh, fear. Fear is the number one emotion, right? Like, no one wants a letter from the IRS. They're not telling you good news typically. So sometimes there's refunds in there. But so the first thing you should do is get a copy of your original tax return ready, because you're going to need that when you call whoever you call. You can call an EA, which is an enrolled agent. You can call a CPA, or you can call a tax attorney. All 3 of those people are qualified to help you through the audit process and help you kind of make the argument, so to speak, of what your tax return stated and why it's correct. Documentation is the number one thing you will need for any argument you want to make against the IRS. So just ask for a professional. Don't try to do it on your own, because the IRS this is recorded, right? It depends on the agent that you get. You either get a really super cooperative, friendly person, and sometimes you might not get that. You might get the complete opposite. So try to keep in mind that they are humans too. They are not personally coming after your money. It is the IRS that comes and gives you those notices. I know some people get upset with them on the phone, especially since the wait tends to be rather long. But they are humans too. And I've talked to some of them, and they are just as upset about the system as you are. So keep that in mind. But there is a path to getting everything corrected, getting it all accurate, and not being in trouble, quote unquote. So don't panic. There are resources for you to utilize that can help you through it. There's even free resources on irs.gov. They'll have a list of people that offer those services for free. But you typically want someone who you're going to pay, because they'll be more invested in it than someone who you don't pay. So that would probably be best. But
you mentioned three professionals. You mentioned an EA, an enrolled agent, a CPA, and a
tax attorney.
Tax attorney. They can all do a lot of things together that the other professional can. But in your mind, what are the lanes that you would ask each one of those professionals, whether it's an EA, a CPA, or a tax attorney? Like, in your mind, where do you think those professionals shine?
I would say, in my experience, tax attorneys are great for series LLCs, like real estate investors. Estate planning is really good for choosing a tax attorney. CPAs is just a wide range, because CPAs and EAs get to choose what they want to do. They can choose to niche. They can choose not to do tax returns at all, and they just do advisory services similar to CFO. So they could just analyze your data for you and report on that finding. And other times they do nothing but tax returns. So it really depends on the individual or the firm on what services they provide. It makes them eligible, though, for more services because they have the CPA certification. An EA has almost the same extent of those abilities, with like two exceptions that I can think of. And tax returns are one of the things they can help you with. Audits are one of the things they can help you with that CPAs can also do. Court cases are not something an EA can do. CPAs have to do forensic accounting and testify on those things. So yeah, and bookkeepers even can do some things that most wouldn't expect. So it's kind of what do you call it? A rodeo. Like, you get to choose what you want to specialize in and handle for people. And we are losing more and more tax preparers by the day. So, so there are people that are eligible to be tax preparers that have what we call a P10, and that is their identifier for the returns that they file on your behalf. So they take a course to qualify for that P10. And then there are the next levels up, which is the EA, CPA, and tax attorney. So
let's say I'm a business owner, and I'm not good with numbers. I'm good at what I do, but I'm not good with numbers. How should I find somebody to provide those services? Let's say I want the whole gamut. I want a bookkeeper. I want somebody to prepare my taxes. I want somebody to help me plan. I want a true partner on my team. How do I find that person?
So it depends on what your parameters you want. So are you wanting someone local to you that you can stop by their office and meet with occasionally? Are you wanting someone virtual where you can do everything through Zoom? You don't care how they gain access or get your reports from you, and vice versa? Or do you want a big firm that has lots of employees that you suspect can help you anytime you need? Or do you want a small firm that's probably going to put a little more effort into communication just because they are a smaller business and they know what that's like? It really it depends. It's what you want to ask is what their process is like for onboarding you as a client, what it looks like to work with them on an ongoing basis. So those expectations, and then what their fees are and what those fees include. So again, setting another expectation, what's included in that fee, not just the communication expectation. And then possibly I would always ask for referrals. You want to know that they're doing a good job with other people's accounting as well. So that would probably be my first method, is reaching out to others that are in the same industry as you. So they know, so you also know that they know that industry. So
Makes sense. In my world, there's something called elder fraud, senior fraud. Um,
mhm.
and I think it touches a lot of things in the tax planning world. What have you seen fraud as far as tax preparations, and what are some things that taxpayers should look out for?
So there are a lot of scams when it comes to tax things, because things are changing every year, changing per disaster like COVID, per hurricanes. So one example that's really common, that's happens every year, is third parties use advertising mailouts to scare tactics, I call it. So for example, I had a client that came to me recently and showed me a notice that they got in the mail, and it was from FinCEN. So there's a new report, and if you're not aware, it's called a BOI report. It's brand new for this year. Everyone that owned a business prior to 2024 has to file by December 31st. Everyone that started a business in 2024 and going forward has to file within 60 days. So this notice that they received in the mail was informing them that they were late in filing their form, and they were going to owe up to $1,500 a day if they didn't call them and get it resolved. The logo on the notice was almost identical to the FinCEN logo, which is the Financial Crimes Enforcement, except it said FinCEN Alliance, and that's not what their logo says on it. So the other clue is down at the very, very bottom in the tiniest fine print, is this is not associated with FinCEN or any other government agency. So, and this is a advertisement, blah, blah, blah. So those are real common to do. Like, for example, with the ERC, I don't know how familiar you are with what happened with that, but we had a lot of third parties come in and say that they could file those employee retention credit forms for them and get them a lot of money, like hundreds of thousands of dollars. And so they did, and then they disappeared because they weren't legitimate. They got their portion of the refund and left. And now people are left holding the bag with the IRS investigating them because it was not correct. So that was a big COVID scam, and it sucks. But things like that, where it's usually like a third party advertisement, really concealing themselves as if they're part of one of the departments and saying you owe, and or they can save you all this money. Anybody that says I'm guaranteed to save you $10,000 on your tax return, you might want to question that. Everyone's tax return is different. You cannot guarantee that. Like, everyone's is different. So anyone that makes guarantees, I would probably steer away from. Another thing is referrals. Ask for referrals. It doesn't hurt. And if they don't give you any, maybe that's not the right fit for you. Yeah, that's kind of the common ones.
What is the biggest mistake you see business owner make when trying to prepare their taxes? Is there something that they consistently miscalculate, don't think about? What do you see consistently happening with the people that you work with?
So during COVID, the big TikTok trend was to become an S corp, without knowing any of the rules of being an S corp owner. So then you had those business owners having to go to professionals because they learned that they were actually supposed to be on payroll, and they didn't pay themselves on payroll. And that matters because you're supposed to pay yourself reasonable compensation annually as an S corp owner. If you don't, you can be penalized. And if you are taking distributions instead, meaning you're just going to the ATM and paying yourself out of the business account, or if you transfer from the business account to your personal account and you're an S corp owner specifically, that's bad. That's paying yourself outside of payroll, and that is not taxed. So you are now penalized for those distributions on top of that. The IRS is going after S corp owners specifically because it became a trend. So if you see something as a tax trend, it also makes you more vulnerable. And so you really need to know the ins and outs of what those trends are truly, and not just listen to the advice on TikTok or social media. Always do ask questions to your tax professional, or even your bookkeeper might know. Like, bookkeepers know a lot more than you give them credit for. So don't be afraid to ask questions. Always ask. It doesn't hurt to ask. The worst anyone can tell you is no.
So let's put the debate to end. When is it appropriate to transition from an LLC to an S Corp if you're a solo business owner?
I usually recommend waiting till you're at least making 6 figures annually. The other big thing that I stress is psychology of money. Are you good about keeping to paying yourself on payroll? Say you went from drawing out $200 here, $200 here, sporadically paying yourself, right? To now, okay, I'm going to pay myself $1,200 net every 2 weeks. Are you going to be good about that? Or are you going to keep taking money out of the ATM every day? Because those do add up. And if you end up taking more distributions than actually what you pay yourself on payroll, that's also a flag. You can also be audited for that. So, but generally, like money wise, number wise, you got to be making at least 6 figures before you start putting yourself on payroll. Because the other factor is, do you already have employees that you're paying? Because those payroll taxes are pricey, you know? So, and if you're doing it through a third party, you got third party fees to pay. So you got to be making enough to really switch over and to see the benefit. So yeah.
Now, are we saying 6 figures gross or 6 figures net? Because that's a big difference.
It is a big difference. And again, that's where the psychology comes into play. Because if it's just you as the employee, you don't have any other employees, you can manage that and still be paying yourself enough. But is it enough? So then the next question is, what do you have to walk away with as the owner to pay your bills, to pay for your kids' stuff? So always determine that when you're trying to, as an owner, do a calculation of your bills, your expected groceries, your kids' school stuff, sports stuff. Be honest with yourself. Don't do it as a budget. Just do it based on your actual numbers. Like what's your average, what's your high, what's your low, and total those out. This is what I have to walk away with. This is what I have to make net. And then you'll look at your business income. Okay, so now I have to make this much in sales for this product or this service, and this much in this service or product in order to make this for myself, solely for myself. So that's a big thing too. Like, again, it goes into the psychology of it. Like, are you going to be good about paying yourself on payroll and sticking to that? Or are you going to start seeing those numbers come in, be like, oh, I can give myself another 1,000 right here. It's fine. I'll do it. You know, so psychology plays a big part, especially in that first plateau of becoming small, single member LLC, you know, under 6 figures to, oh, now I got 500K coming in. I can do this, you know, like I can give myself another 25,000. You might be able to, but let's put that on payroll so that you're making more of a benefit out of it instead of costing you in penalties and fines. So
no new client bonuses if you're above your already expected payments, correct?
Yeah. Try to avoid as much possible. It's not entirely like a no, like you can't take distributions. You just can't be excessive about it, and you can't not pay yourself a reasonable compensation. That's where it comes into play.
Like that. So what's next for you and your firm? How do you see yourself growing? Are you planning on getting more staff? Like how do you see yourself in the next 10 years?
More staff.
Yeah.
Definitely more staff. This year has been a good year for us. We've been very busy, but I am starting to feel that strain of too many hats and needing more staff. So we are in like the works of hiring right now, and that's always fun. So yeah, growth is always on the board. So I'm always looking for ways to grow, how to make things better for the existing clients first, and then working my way out from there. So
if somebody's looking for an accounting job, what is the best way to reach out to you?
Email Lissa at LM2Biz.com.
So if somebody's listening to this and they say, hey, that is my tax person, I need all those services, what is the best way for them to reach out to you?
They can email me, the same email, or they can go to our website, www.lm2biz.com. And there is a little button right there on the first page that says schedule a call now. And our initial consultations are always free, always free. The reason for that is our moment to figure out if we're the right fit for each other. Because again, it's a partnership. It's not just a one-way street, one way or the other. And I don't do transactional relationships. It has to be a partnership. We got to both be invested.
I love that. I love that a lot. Well, thank you. Obtaining an accountant's time is a big deal. So I really appreciate you taking the time. I think the nuggets that you dropped are definitely going to be beneficial to a lot of people. So thank you for joining us.
Yes, thank you so much for having me.
If you've been inspired to leverage your practice to create financial freedom, please schedule a consultation with Deasil Wealth Management. The legacy you dreamed of is a 15-minute phone call away from becoming a reality.
The more I know, the more money I can make.